China says substantial progress has been made stabilising trade relations between Canberra and Beijing. Another strong weekend in the housing market, and why wallets are becoming unfashionable. It's Monday, the 15th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I'm very well today. I'm excited about the week ahead.
Yeah, especially after last week being such a massive week with the budget. It feels like this week has actually got a few big things happening as well, and plenty of stories today.
Yeah, absolutely. Plenty to talk about. Let's get into it.
Yeah, sure. We've got an interview coming up after the show with basically a Fear and Greed regular, Chris Breike, the CEO of online investment advisor StockSpot. Always a good one for investors.
Yes, absolutely. We talked about how to invest in artificial intelligence, in AI, whether you can in Australia, what to think about when you're investing in these, not just AI, but technology trends, what to watch out for, all sorts of things. It's a great one for investors.
Absolutely. And of course, we're not an investing podcast, and you should seek professional advice before making investment decisions, but it's just some good ideas and just some things to think about, really, a starting place, really.
Absolutely.
Now, the main story this morning, Sean, this is a big one. China says, quote, substantial progress has been made on stabilising trade ties with Australia during high-level ministerial talks. And now Beijing wants to work towards more positive results. That sounds pretty promising.
Yes, but there are conditions. Beijing wants improved investment access in key areas, including critical minerals, and wants Australia's support to gain entry into the Trans-Pacific Trade Partnership. This is according to a report in the Australian newspaper. Trade Minister Don Farrell returned over the weekend from a 2-day trip to China without concessions on the country's $20 billion worth of trade bans against Australian exports, but said he was encouraged at the positive direction of negotiations. Then, in a weekend statement, this is after Farrell had left, the Chinese Commerce Ministry said Beijing would work with Australia on resolving the nation's trade disputes. And I quote, the Chinese side is willing to work with the Australian side to jointly expand more areas of cooperation and hopes that the Australian side can provide a good business environment and treat Chinese companies and products fairly and justly, it says.
All right, so if I was to summarise it, you'd kind of say no breakthrough, but we're heading in the right direction.
Yes, I think that's fair enough. Minister Farrell asked his Chinese counterpart, Huang Quentao, to visit his Clare Valley vineyard. So clearly the two trade ministers are getting along. That invitation was accepted. The Chinese Commerce Ministry said the meeting sent an important signal for the improvement of Australia-China relations and also heralded the stable development of bilateral economic and trade cooperation. Senator Farrell said the meeting represented an important step forward. Now, remember, China imposed tariffs on Australian exports, including barley, beef, wine, lobster, coal and timber back in 2020. That's after the Morrison government called for an inquiry into the origins of COVID-19. Ever since the Albanese government was elected, things have improved. And in fact, Prime Minister Anthony Albanese is expected to head to Beijing later in the year to celebrate 50 years since Gough Whitlam visited the country. Michael, I'd imagine the government, or the governments, will be working towards a timetable in which the leaders of the two countries can announce something fairly significant at that point.
We discussed this at length on the weekend edition, didn't we, Sean? Just about how far relations have come effectively in the last year since the election, with the election really being a bit of a circuit breaker for the relationship.
Absolutely. What always amazes me about these huge geopolitical stories is how much relations matter. And so individuals that get on, so Morrison obviously didn't get on with Xi Jinping or other Chinese leaders. No value judgment in that. That's just how it was. Albanese clearly does get on, well, at least somewhat better than Morrison does. And it does lead to breakthroughs. It happens in corporate land. You know, when there's mergers and acquisitions, if chairman and CEOs get on, things just go better. It's funny how it often boils down to personalities.
Yeah, you really don't think of it happening like that, do you? But I suppose that's kind of the importance of diplomacy at all levels.
It's kind of why you and I work so well on Fear and Greed, Michael.
I'm just a moment of silence while I process that going,
what's next?
I think that's a good thing.
Yeah, I do.
Cheers. Thanks, Sean.
No worries, Michael.
How did local markets finish last week?
Well, the S&P ASX 200 finished Friday up just a touch to 7,257 points. Now, as you mentioned, last week was full of news. The federal budget, US inflation figures, Commonwealth Bank's third quarter earnings. There's a big lithium merger, among other things. Yet the market closed pretty close to where it started on Monday morning. On Friday, among the large caps, BHP, Fortescue Metals, Woodside Energy, Rio Tinto, Santos, and particularly Gold Digger Newcrest Mining were all sold off. The two best performers, among the large caps at least, were the healthcare leader CSL and tech leader WiseTech Global. The banks were mixed and the retailers outperformed.
And much happening on international markets over the weekend?
Not really. I mean, Wall Street ended slightly lower. Commodities were generally lower as well. Brent crude was down 1% to $74 a barrel. Gold was off a bit. It's now trading around $2,020 an ounce. The Aussie dollar's fallen a bit to be worth about 66.5 US cents. Though, Michael, I can't just talk about international markets without having something of interest in it. Coffee. Now, cheap coffee prices are soaring, which is kind of, I don't think you can say that. Can you? Cheap prices are soaring?
I don't think so, no.
Anyway.
But you did.
I did. So espresso coffees we tend to drink are made from Arabica beans.
Mm.
The international roast tin comes from Robusta beans. So they're the two types of beans in the coffee world. Now, Robusta beans are much less expensive. They come from trees that are much hardier, require less care, hence cheaper. Don't taste quite as good either. Now, as the cost of living bites, Robusta beans, though, have been in much, much higher demand. People are trading down. At the same time, the big producers of the beans, Vietnam, Brazil, and Indonesia, have had poor crops. Put that together, and coffee beans, at least Robusta coffee beans, are at 12-year highs. There you go.
I love it when you kind of tell me about something a little bit unusual in international markets. In the past, you've kind of covered unusual commodities, things like orange juice and pork. Isn't that another one that gets a lot of...
Yes, it is. Pork is, we don't talk about it, but pork's a very heavily traded commodity. Yeah, what we should do is just try, every couple of weeks, an obscure commodity.
Yeah, please. Just for my own education, because I'm here just furiously taking notes constantly.
Oh, Michael, please. You flatter me, and I know you're lying.
No, I haven't sent you through a picture of my notes from last week.
Yes, that's true. That's true. The notes had nothing to do with what I was talking about, though.
There's a lot of doodling going on.
A lot of doodling.
Because I'm processing what you're saying, and then there's just a couple of key words that really, when you look at them in out of context, don't make much sense and really just kind of emphasize the fact that I'm looking for the innuendo a lot of the time in what you're saying.
In fact, I'm trying to remember last week that when you sent it through, didn't it actually include the word? I'm just trying to think of what you called major player or something like that.
Yeah, it's when we nicknamed you major player, and then
I know it was at the bottom of the doodling was the word erotic, and I have absolutely no idea why.
It's probably best to leave it that way, Sean. We'll be back in a moment with the rest of the day's business news. Sean, another strong week of auction clearance rates with the preliminary number coming in at 74.4%. That's 2 weeks in a row now over 70%.
Sure is. Last week, 75.1% was the highest since February 2022, and this weekend was the second highest. It adds to the story that house prices are bouncing back, or at least have plateaued. Helping out is low supplies, with volumes down 3% over the past week or so. Sydney is definitely the hot market at the moment, a 76.2% preliminary clearance rate. That's 9 consecutive weeks over 70%. Melbourne isn't far behind. Its clearance rate was almost as high, 75.7%. It's had 5 weeks above 70%. Adelaide did best of all the capitals at about 80%. Canberra recorded a 67% clearance rate, and Brisbane was at 57%.
Sean, Australia's biggest super fund will refund around 100,000 members a total of $70 million after discovering it overcharged them for fees associated with having multiple accounts.
Australian Super self-reported the issue to the Prudential Regulator and last week started informing affected members, with the average remediation payment per person sitting at about $650. Now, this isn't actually an uncommon problem, and there have, over the years, been several crackdowns on fee gouging by super companies. Excess fees and insurance premiums on lost and forgotten accounts are estimated to cost savers $2.6 billion annually. Excess fees from having multiple accounts disproportionately hit younger and poorer super fund members, as they're more likely to have opened multiple default super accounts across casual and part-time jobs. Also, their balances are lower, so proportionally more money comes out.
Now, this one's an interesting one, Sean. The Fair Work Commission is, of course, the independent national workplace relations tribunal. It looks at minimum wages and employment conditions, that kind of thing. But there are claims that Labor is stacking it with former union officials.
Yes, now the important word in all this is independent. The Albanese government has appointed 8 current and former officials to the Fair Work Commission, including the current ACTU Assistant Secretary. That takes the number of Fair Work Commission members the government has appointed in the past year to 12, every one of them with union backgrounds. Now, Workplace Relations Minister Tony Burke defended the appointment, saying he's just seeking to correct the coalition's shameless stacking of the commission with members from employer backgrounds. He said the balance is still not right and flagged more union appointees. Maybe, and without saying who's right or wrong in this, wouldn't you just want the best people at the Fair Work Commission?
Yeah, I think so. And I mean, the more kind of scrutiny, the more kind of transparent the process, the better.
Yes.
Now, I don't know about this. Nearly 40% of people no longer carry a wallet. It seems everyone's kind of using smart watches and mobile phones as a means of making payments now.
Do you carry a wallet?
I don't. Not anymore because I use my phone and my watch. And you know the difference? You know that the thing was when you could get a digital version of your driver's license.
Yeah.
That was the game changer for me. Suddenly there was no real reason to have your wallet.
Just occasionally you do something. So my son turned 18 not that long ago, and we put money behind the bar at where we went, and they wanted a physical card, and I haven't carried a wallet for a long time. So I got caught out on that day. But once you've got your app which shows your driver's license, you don't really need a wallet anymore, I've decided.
Yeah, and checking into a hotel, I think, was the other one where they needed a physical card.
Yeah. That's true.
But I mean, look, you would think that these are things that will change fairly quickly.
Well, it is changing because 3 years ago, about 19% of people didn't leave home without a wallet. So 80% always took a wallet. Now, 38% are happy to leave home without a wallet. And it's 2/3 of people in the 18 to 24 year age group. They totally rely on digital wallets to make payments. At the other end of the spectrum, only about 10% of Australians over the age of 65 years leave their wallets at home. The figures come from an Australian Bankers Association study. It says 70% of Australians haven't visited a bank in the past month. 70%. I'm surprised it's only 70%, to be honest. I haven't been to a bank branch.
Yeah. Oh, no.
Yeah, a long time. Only 3% have visited a branch 3 or more times in the past month. By far the most popular way to check account balances and pay a bill is via mobile banking apps, although there's still about 1/3 of the population that uses internet banking.
I paid a sorry, I got very excited when I remember this. I paid a bill the other day using my mobile banking app. And suddenly I saw this little thing where it said, just scan your bill. And so I just took a photo of the bill and it auto kind of filled everything, all the BPay details, the amount. Because, like the biller code and then the reference number can be like 15 digits long and it just takes forever and you're worried about getting it wrong. And it just auto filled it all from a photo of the bill. And it made the whole process so quick and easy. And I was just blown away by that. I loved it.
That's very cool.
Technology.
There you go.
Flooding in Australia, Sean, severe winter storms in the US and recent flooding in New Zealand have all hit insurer QBE's bottom line, with the group saying the string of natural disasters will cost them $190 million.
The news sent QBE share price down more than 4% on Friday, though it closed about 3% lower. There is some good news, at least for shareholders. The insurer will be able to charge higher premiums, with gross premiums expected to rise 10%. Now, one of the key metrics for insurers is proportion of claims to earnings, and this financial year, that's likely to be worse than expected. QBE is a really interesting company. It started in Townsville back in 1886. It's now Australia's biggest insurer, operates across 27 countries, managing risk for all sorts of challenges. It's the 21st largest company on the ASX, worth around $22 billion.
A weak advertising market, rising costs and lower property prices and sales volumes pushed News Corp earnings down 11% during the March quarter, Sean, but its share price still jumped more than 5% on Friday.
Online real estate platform REA was a real weak spot, with pre-tax earnings down 26%, reflecting fewer homes being for sale. Dow Jones did well, with earnings up 24%. Now, the Rupert Murdoch-controlled company, which owns Wall Street Journal publisher Dow Jones. It runs book publisher HarperCollins and newspapers like The Australian, The Times, The New York Post and The Sun. It is also a majority owner of REA Group and Foxtel. Chief Executive Robert Thomson said advertising in parts of the world was, his word, insipid.
Oh, what a fantastic word. Isn't that great colour from a CEO?
Yeah, insipid advertising.
Oh, it's just so kind of visual.
It is.
Just picture it just all limp and gross. Please, sorry, go on.
News Corp's, Thomson said that the group's decision to cut 1,250 jobs will yield about $160 million in savings.
Mining services group Worley is growing fast in a prolonged upcycle, according to CEO Chris Ashton, as it shifts to service green projects.
Yeah, the news came out last week and Worley's share price rose. The $8 billion plus company held an investor day. I don't really talk a lot about Worley, but it's the same size as companies like Seek, Seven Group, carsales.com. Now, Ashton said it is the busiest it's been in his 25 years at the company, and Worley is benefiting from the shift in strategy of targeting projects around energy transition, including gas projects. Sustainability-related work accounts for 40% of the company's backlog, or it did at least at the end of March. Worley is targeting what it hopes will be high-margin projects, including copper, low-carbon fuels, energy storage and energy networks, water, battery materials, low-carbon hydrogen and carbon capture and storage. The theme with all that, of course, is it's the transition economy that's driving growth for Worley.
Now, we love these kind of success stories. Sean, one last one before we get to international news. Char Grill Charlie's Chicken Shop, which began with just one outlet in Sydney's beachside suburb of Coogee back in 1989, has been bought by private equity giant PAG Asia Capital.
Now, I've got a boast here. Char Grill Charlie's, I lived in Coogee at the time, and I remember visiting it when it opened. I can't say it was day one, but it would have been the first couple of weeks. And I was a regular at Char Grill Charlie's. I was at the University of New South Wales at the time studying, and there you go.
So you are pretty much to thank for the success.
The reason I ate a lot of, I love their chips actually.
You helped them through their humble beginnings.
That's right. So as you mentioned, PAG Asia Capital, that's PAG Asia Capital, is buying Char Grill's Charlie's. That group also owns Red Rooster, Porto and Chicken Treat. The Scher family built Char Grill Charlie's, and last week co-owner Saul Scher said it was a difficult decision to sell after 34 years. He said all they really did was take the traditional Australian chicken chop to the next level. Fair point. For those who don't know Charlie's Chickens, it specialises in chickens, roast vegetables and salads and great chips. Operates mostly in Sydney, but it also has stores in Melbourne, employs about 500 people. There's no comment on the price tag, but good on them.
Yeah, well played. All right, international news now, Sean, and the Russian Air Force has suffered its worst day of losses in 14 months of war in Ukraine on Saturday, with 2 fighter jets and 2 helicopters crashing in mysterious circumstances.
The aircraft crashed in the border area near Ukraine, and it's not immediately clear why. Aviation analysts and Russian military bloggers speculated that they had either been brought down by friendly fire or Ukrainian air defences or shot out of the sky in an aviation ambush laid by Ukraine, according to the Telegraph of London. A Moscow-based newspaper reported that all 4 aircraft had been part of a coordinated attack on Ukraine.
And finally, Sean, the boss of JP Morgan Chase and only big bank CEO standing from the global financial crisis, Jamie Dimon, has warned against more regulations of banks.
He said it's time for regulators to help put an end to turmoil in the banking industry, but he reckons policymakers will take away the wrong lessons from what's happened this year. He expects banks will have to follow more regulations, more rules and more requirements, as he put it on Bloomberg television. The problem is that if you overdo the rules, community banks end up with more compliance people than loan officers. It's a fair point. JP Morgan stepped in and purchased the flagging First Republic 2 weeks ago.
All right. Up next is the Fear and Greed Daily interview with Chris Breike, CEO of online investment advisor StockSpot.
Yes, all about investing in AI and artificial intelligence. Definitely worth a listen.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, and as well make time to have a listen to Fear and Greed the week ahead with Stephen Koukoulas, our resident economist.
Yes, he's recovered from last week's budget and things like that. Still plenty of economics going on, and Stephen is his normal, enthusiastic self this morning.
Absolutely. Finally, Sean, just very briefly, I wanted to nominate a MEA for today.
Yeah.
A most enthusiastic advocate, an MEA, so someone who is a Fear and Greed kind of super fan and tells everyone about it and encourages them to listen. This came in via Instagram. Someone sent us a DM there. You can find us at Fear and Greed Podcast on Instagram. And it's Buster is his name.
Buster.
And he says, I really like the content. I work at a waste transfer station in North Queensland. My favourite part of my workday is driving the loader with the aircon on and listening to your podcast while I smash stuff.
Oh, Buster. That is sensational.
How cool is that?
That is very cool. Wow.
I'm a bit jealous.
Yeah.
I would love to smash stuff.
Well, just Buster. I'm loving it. I want to hear more about Buster.
Yeah, me too. Buster, can you let us know more? We want more details. We want kind of pictures of things getting smashed.
Yeah.
That'd be cool. Anyway, Mia for today, most enthusiastic advocate definitely goes to Buster. And if you want to self-nominate, then please just get in touch and do that. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 15th of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, as Buster did. You'll find us on Twitter and Facebook as well. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. All you have to do is say, Alexa, play the Fear and Greed podcast to catch the latest episode. And you can get yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.